Hi everyone, I am Rohit Yadav, and today we are covering private assets from a strategic perspective while taking a tools focused lens. That is, how tech tools and portfolio management tools are changing the face of private markets and the venture industry. As venture capital navigates a pivotal phase, the future of asset class remains a top strategic priority and a question for all of us to answer. And that's why I'm on this journey to unravel the different forces impacting the ecosystem, including the rise of private markets and asset classes like private equity and venture capital, and how we all, as investors, founders, and ecosystem players, should make sense of it. To do this, I have a perfect guest with me today, Eric. Eric, thanks for joining us.
Thank you. Wonderful to be here. I'm excited about this topic and look forward to it.
Me too, definitely. So, Eric is co founder and CEO of Revere, a data and software solution provider for LPs and allocators investing in private markets. Before this, Eric was head of the institutional capital at AngelList, and many of you might have heard about AngelList already, where he led the marketplace matching for syndicate leads, which is fund managers, with the LPs. And before this, he spent 10 years as an institutional LP where he started or led emerging manager programs for them. He lives in the Bay Area and is a graduate of UC Berkeley. So, Eric, I hand it over to you. Tell us all about Revere, its origins, how it started, and the mission or the vision that you're trying to solve for.
Well, thank you for the kind introduction. The mission, like a lot of startups, really was formulated from my previous experience as a former institutional allocator. We had management fees, we had staff, we had an analyst team, but yet everything at the end of the day was still quite a very manual process. And the usage of data was always so inefficient. There was just so much infusion of human judgment. So a lot of the roots of how Revere got started in its DNA, both myself coming from the institutional LP world, my co-founder Chris Shen came from the family office world, different flavors of LPs doing private market investing. So really we formed Revere with a very simple mission: greater transparency through data and better automation by taking a lot of the manual processes and automating that. And of course, we get the benefit, the luxury of AI and AI agents to help in that process. And when you put those two things together, we ultimately believe it's about making faster, better, smarter investment decisions. And especially a category like private markets with all the different types of asset classes, this is the difference maker in terms of why people are adding those types of investments into their portfolio. So excited to unpack what that means, but the mission and what we built as a product suite today is very much a software stack, taking everything from the data that's coming through financial statements, providing visualizations, analytics, and then really kind of that smart optimization to portfolios.
Thanks for the explanation. And I think you rightly mentioned in private market itself is so much more important because private markets by default are private. So there's a bit of intransparency embedded within the system of private markets. And so with data and AI, obviously it makes sense to kind of capitalize on this opportunity now to make things more efficient, effective, transparent. Where do you see Revere 3 to 5 years down the line?
Well, if you asked me this question maybe a year ago, I think it would have given me a little bit of a formulaic answer. But today, with the prevalence of AI and the pace of AI essentially as part of the fabric of how every single software company is building today, honestly, we don't know what it's going to look like in 2 or 3 years because so much of AI is eating very meaningful parts of how workflow is happening today. Okay. And of course, there's still this big concept of, okay, well, AI is only going to be as good as the data and the data set that it's able to consume and train off of. So we're in an interesting period. I think if we want to draw upon the analogy, right? If we, for many of your audience who think about, there was a moment in time, probably 20 years ago, where people were moving from the flip phone to now this big thing was like, the BlackBerry. oh my gosh, it's got a little keyboard and, you can do emails. And so I think we're, as a software company, and especially a software company building in a vertical niche that has not been disrupted by technology, we're going through that flip phone to BlackBerry moment.
Wow. Okay.
And if we know history, we know around the corner is the iPhone transition, which is what makes this completely game changing. So 2 to 3 years from now, I think we will, in the 2 to 3 years, reach an iPhone moment in terms of how software companies are utilizing AI. And that is almost unfathomable in terms of like what the imagination can do in terms of this automation. So not meant to skirt the question
Mm-hmm.
with this kind of an answer, but I think it just only makes me more excited to be building in this category because we know these next great moments are going to bring something amazingly fascinating to the market.
Amazing analogy. I loved it. So if you see the future 2, 3 years or 5 years down the line, you still want to be focused on tools and how tools can kind of effectively solve the issues of efficiency, issues around transparency within the private market sector. And you see this opportunity as big enough. Obviously, there is element of evolution and revolution, as you mentioned, but you want to be within that space and you want to be, let's say, number one player, right?
It's very necessary. I think tooling, I would even redefine the foundational structure to all this is real. How do you get good, clean data, right? This
Okay.
concept of a data lake where you have data sitting in different silos today. It needs to be aggregated. It needs to be normalized. It needs to be sanitized and then, refreshed periodically.
Yep.
So data and the tools to affect that pristine data lake
Mm-hmm.
is the moment we live in today. But it is very much the tip of the iceberg because once you do have good data in private markets, now you actually can start to influence how investment decisions are made, whether it's portfolio reallocation, whether it's assessing new investment opportunities. This means all of it is going to drive better returns and lower risk. And the reason that is so important, because if you think about everyone out there in terms of industry reports talks about the movement from the 60-40 public fixed income portfolio, and a lot of registered investment advisors, private bankers are now almost like one third, with one third of it being in private markets.
Private markets. Yeah.
So the amount of capital that is on the precipice of moving into alternative assets and private markets is only going to be unlocked when we have this kind of tooling of data and infrastructure in place. So to answer your question, I think, our ambition is to be more than a tooling company.
Mm-hmm.
As former allocators, we believe that we can use the tooling to affect better investment decisions at high volume, high scale, and at high throughput.
Got it. Awesome. It's a perfect segue into the kind of next segment to this private markets in general. You mentioned movement from 60-40, one third kind of allocation, one third, one third, one third, one third being private markets. Why are private markets becoming so important from a portfolio context for the investment industry?
Well, I won't get into sort of the theory because there's elements of that I think mathematically make a lot of sense. But really where I think there's an easy explanation is there's a human emotion, right? So any investment decision, even in the private markets today, there's still a human behind, clicking the buy button for the most part, right? In terms of these sophisticated portfolios.
Mm-hmm.
Private market investing is historically such an esoteric and exotic category, and it's now capturing the imagination, right? So if you think about the yields you can generate on private credit, right, in an
Mm-hmm.
institutional fashion. Well, as an allocator, you're like, oh my gosh, this is so much better than investing in treasuries. If you think about a family office that is going from one generation to the next, and the next generation is tech savvy, tech forward, they want to participate emotionally in venture capital because maybe their friends are in the startup world. So the human element is playing such a large role in terms of this movement into alternatives. And of course, the gatekeepers of the capital are trying to play catch up to make sure that they can service this demand. And it's very, very early innings because, again, I think the early adopters, the early movers have come in. And now we're still facing that inflection point in terms of the mainstream coming into alternative assets.
Okay. So, with respect to private markets in general, obviously there's this theory of diversification, additional return, and so on. And without going into details, obviously there's to some degree this emotional element related to couple of asset classes and venture in particular, right? So we can cover this afterwards as well. But there are a lot of factors for which it's becoming important, not just for family offices, but also institutional investors. And if you think about it, institutional investors have been into alternatives per se, like private equity, real estate also comes under alternatives for actually a very long time. So it's an established industry, yet it's growing and booming. I would like to ask you this question about private markets that we talked about complexity, we talked about intransparency, we talked about a lot of data coming in. Impact do you think this evolution of private markets and the growth of private markets will have on the portfolios of investors?
Well, so thank you for pointing that clarification. Yeah, I think when I was at AngelList, we use this word, right? Democratization of access. So the access to private markets, in particular venture capital, just we're close to a lot of types of investors. So we're very much through, I believe, at the very tail end of like the democratization phase of people, if they have interest, whether it's, I want to, invest in a venture fund or I want to invest in, late stage kind of unicorn companies, there are access points. So what that means is we've leveled the playing field for access. And what comes next is, well, what makes sense? What is the right mixture? The asset allocation strategy. You adhering to an endowment model where you've got kind of fixed ratios of public versus private markets? Is it something where that private equity and venture could be additive to your operating business, right? In terms of strategic insights, strategic partnerships. So really the question comes down to motivation. You can look at it from a purely financial returns perspective. You can look at it from a purely strategic returns perspective, or really the reality is it's a mixture of both. But this is something that is so different compared to public markets, right? Public markets, it's efficient. It's, milliseconds in terms of how you trade and make returns. There really is, in my opinion, kind of a true strategic nature of, why are you investing in Apple stock versus Amazon? But when you look at private markets, that's a very different equation. The element of strategic value that you're extracting from that investment in your portfolio.
Got it. And you mentioned a very interesting point of democratization. Democratization can happen at various access points, as you mentioned. So, how would you explain the structure? Where is it happening? Is it happening just on the startup level, or is it also happening on the fund level, or is it also happening on the secondaries level? Let's say, and there are like multiple access points, right? So everywhere there is some platform which is coming up and trying to give access to people, to high net worth individuals, and so on. If you can explain on that.
Definitely, there's access points like AngelList, right, for investing in startups and funds with check sizes as small as $1,000, assuming you're a accredited investor. Similar types of concepts have been introduced in private credit and infrastructure. So platforms have been in this first wave the initial access point, and this is more for retail or mass affluent investors. We've also seen different IRA type of platforms that IRA regulations now allow you to invest in kind of illiquid assets, right? So that's been another interesting and important lever because, again, most of the stuff that's happening in private markets is quite illiquid, especially venture. And then you have, which I think is the maturity of the ecosystem, where you have your wealth advisor, right? These are, Edward Jones, Morgan Stanley banker, Goldman Sachs. They now know part of the reason and part of the ways to retain or attract new clients is to offer them products that cover alternative assets, right? So it's very much part of the fabric in terms of what is a complete offering in terms of billing this kind of modern portfolio theory asset allocation. And some of it is, like I mentioned before, kind of startup or platform type of marketplaces. But a lot of it now actually is quite institutional.
Okay. And if you just talk about platforms and tooling, because this is the core and the crux of
Yeah.
this podcast, what do you see that is needed in the market to unlock growth? I mean, obviously, AngelList has been quite popular, and obviously, it has been one of the first ones. So it has the maximum amount of time period to kind of prove its value to the ecosystem. But there are more and more coming in secondary markets. There are more and more actually coming funds which are taking this play on technology and trying to bring more people into the game by accepting lower minimums. For example, there are platforms which take lower minimums from high net worth individuals, like 10,000 euros or dollars, and then they invest in private equity funds which people don't have access to, this collection boom and so on. What do you think will unlock the growth for them? Because none of them are like really too big to kind of make difference. So if you look at the entire asset class size, private equity size, it's quite big, and these platforms are actually much smaller. So what's your thought on that?
Yeah, the key word here is friction, right? So let's go back to the human gatekeeper, who is either the principal who's looking to build the portfolio, or it's the wealth advisor or board, CIO, what have you. So the friction they're facing from a tooling and infrastructure perspective is happening on both sides. So on one side, the back office side, you have all of this manual processing that is required to invest in private markets. Public markets are easy. You just log into your brokerage account, and all this information, all these graphs, all these ratios, it's all right there at your fingertips. Private markets, for the most part, those type of analytics and the data capture, the accuracy of the data capture just hasn't existed at the same level as a public markets. So the friction there is you have these gatekeepers who say, well, look, my expectation, my user experience, I believe should be as good as how I'm capturing my fixed income and private public market portfolios. And it's got to catch up, right? The friction you're happening on the front office side is you're getting death by 1,000 paper cuts. You're getting all different types of investment flavors. And for the most part, these are a relatively small percentage of the portfolio. So the amount of time, the amount of effort, the resources to process and pick and choose which are these best private market investments relative to the overall pie is disconnected, right? So that becomes a friction point, even though we know the best intentions, like we want to do it, we know it's additive, but gosh, this is just taking us so much time. So tooling to make both the front office and the back office efficient and effective in quantifiable in terms of the ROI. I mean, this is literally the stage we live in. And I know that there's real value being provided because startup companies are coming into the category. And there's also massive consolidation where big companies are buying smaller technology-enabled companies, ease this type of friction.
I love the way you explain and use the word friction to explain both front office and back office. I want to change the direction and ask about family offices in general and how critical is venture as an asset class. If we just take this venture and family office, two topics together, and what do you think about um, family offices investing in the venture game? They are more inclined towards investing directly or fund-based investments. And I want to tie it back to this, this topic of tools and portfolio, because once they're investing, they need to keep a track on all of their investments. And as you said, there is friction in the market with respect to tracking all the investments. So how do you think this is playing out with family offices?
So I'll introduce another keyword for this type of question, and it's really about the level of sophistication. So the family office category, all family offices, there's a wide spectrum in terms of how they operate, their views on portfolio construction. But if we look at this definition of sophistication, There are a lot of family offices that are very, very sophisticated, meaning they have appropriately staffed, they have appropriately put budget toward being able to manage a private market portfolio. And it is very much required. On the other end, you have a lot of family offices that look at venture as it's a FOMO, right? I have to be getting access to SpaceX because we know SpaceX is going to be a once in a generation type of company, and it's still private, right? And we know private companies are staying private longer.
Yeah.
So you have the other end of the spectrum where people are saying, you know what, we really have to have some exposure here. And the exposure is going to be largely driven by, okay, where are we in this innovation wave? And how can I participate in that innovation wave before it becomes self-evident? And those two strategies, or those two approaches to venture in particular within the family office category, dictates their perception of how they build access, how they do the portfolio management, how they do the reporting. But really this sophistication level, you know, again, we're not using the word about kind of smart or whatnot, but the sophistication level in terms of how they can grapple with the complexity is where we see two barbells to how we go to market with our own products.
So again, love the way you explained it, the level of sophistication, and it obviously relates to their experience and how well they have the team staffed up to focus on this venture capital topic or private assets in general. I want to move to the core of this entire podcast and theme, which is portfolio management solutions and tools. And you would be the perfect person to talk all about this because we have seen a continuous boom in terms of tools which are coming up and which are focusing on different subsectors of the entire value chain. Let's take an example of venture capital, right? So there are tools for discovery for startups. There are tools for LPs to discover, let's say, GPs, right? General partners. Then there are tools for investments like SPV tools, which are coming up and making investments much easier, to pool the investments much easier. Then there are tools for portfolio management. Then there are tools for data analysis. Then there are more tools, right? More and more tools are coming up. I know it's a loaded question, but if you can structure this whole space for the audience and explain in detail, you know, how do you see the whole landscape?
Yeah, I recently participated in a market landscape exercise, and I think the conclusion out of this, there is a market map, and I'm happy to share this with you and your audience. And
Okay,
it
thanks.
had, I think, 6 or 7 different segments, and each segment had anywhere from 10 to 50 different companies, and these are not all just startups. But
Okay,
the reason I bring this up is every way you can slice, you know, what you call kind of the value chain or, you know, the workflow
okay,
of investing in venture or private markets, every single step of that workflow, there's now a sort of a land grab of companies trying to own that particular part of the point solution,
okay,
which is, in my opinion, it's healthy because it means that there is enough demand for software technology and automation of that particular point solution. Term, if you zoom out, it is a little bit of an existential crisis because each of those companies naturally has to grow into the other parts of the workflow, right, to
yeah,
become high growth, sustainable, what have you. So we're at a very interesting inflection point, right? And I mentioned this a little bit earlier. I think there is and has been a lot of consolidation. There's new entrants coming into this. Now, the new entrants coming in largely are driven by the AI wave. Because when I first started Revere, this was 5 years ago, the barrier to entry was my previous experience, and I knew the use case.
okay,
I knew the use case. And so that industry experience and knowledge was the moat through which I can build a better product.
got it.
That's still a moat today, but that's not the entire moat because a lot of the things that are happening with AI,
Mm-hmm.
AI now can say, you know what, it's like, well, look, something as simple as like getting you off of Excel into a dashboard, well, that doesn't require industry experience. Now, a dashboard to make smarter investment decisions, that does require industry experience.
Mm-hmm.
So what's happened is AI on the edges of these workflows is now eating into the value proposition that individual companies are providing. And in some instances, just completely automating it.
Okay.
So when you put those two things together, it's every 3 or 4 months, something interesting is happening
Okay.
across this market landscape.
Okay. And when you talk about this whole landscape altogether, where do you see most growth coming up, and which tools are the most exciting with respect to growth, with respect to the users and the demand of the usage? Because let's take an example of AI, AI making discovery of startups easier. So there is this element of, for a venture capital GP, that he or she is able to kind of discover new startups, but then there is limit to it, because then it becomes commoditized for everyone, right? So everyone has a similar access. Once everyone has a similar access to an investment opportunity, then where does the alpha lie, right? So all these kind of questions then puts a stress on that particular startup area. So if you can zoom out and maybe tell about where do you see the most exciting opportunities coming up?
Yeah, I'll give you one answer that's short term in nature, and the second answer is a little bit more longer term in nature. So the short term answer, as you accurately described, there's individual tools or solutions to give you one part of the portfolio building experience. But if it only stops there, that means you have data and an experience that's stuck in that particular silo. So the short term opportunity is, how do we define this data lake that can seamlessly connect to these different silos, these different point solutions, and just get that in a centralized fashion. So all the customers we talk to, all the allocators that I've talked to, they are grappling with this. This is the most important infrastructure question for them, is how do we standardize, how do we kind of normalize all this data that's sitting in different systems? And so that is a tremendous opportunity. And there's, of course, a lot of us, including Revere, that's going after that category. Longer term, once you have good data infrastructure, where there is a very bright line today in terms of the mental compartmentalization, is you have both teams and infrastructure that think public versus privates. And those two worlds are going to start to collide. And let's rewind, go back into the history books and bring up something like the Bloomberg Terminal, right? Bloomberg
Still
Terminal
exists.
it still exists, and it's still highly, very, very profitable, very, very important for many, many people.
Yeah.
But Bloomberg was sort of this ability that with kind of a single interface, you had
Mm-hmm.
all the information at your fingertips. You can execute trades, you can get news, you can do all this wonderful thing. It was the amalgamation of what was somebody going to different systems or going to do different processes in one terminal, physically in one terminal. That same thing is going to happen with the merging of public and private data and the workflows, right? Because again, very different workflows and efficiency on how you execute public and fixed income portfolios versus privates. And when those two worlds collide, you're going to see, and this is kind of our ambition, you're going to see this kind of next version of a Bloomberg terminal. Of course, it's going to be infused with AI along the way. And that's a massive, massive opportunity.
So you want to say the next version of Bloomberg would be a combination of private and public, right?
Absolutely.
Okay.
Absolutely.
I will ask a question which is much related to this. So we have this Bloomberg terminal that you just explained, and which will have this combination of private and public. If you look from the investor side, is the investor more worried about discovery, or is the investor right now more worried about handling the infrastructure, handling different tools? So you have explained it a little bit, but what's the biggest topmost worry for an LP, for an allocator right now?
Yeah. Let's be very clear that if we really pinpoint what makes like that Bloomberg terminal such a special experience, is it's so sticky, right? You live, you come into work and you log in and you live in that system. throughout the whole day. You can't say that for a lot of, let's just call it reporting or portfolio management systems. People are, like data rooms. People are coming in, getting the data, and then they're moving out. They're like, okay, I'm done. I got what I need.
Yeah.
So if we really try to emulate this philosophy, like how can you create a system where we're literally allocators or investors at large are living in that system? This is the ambition, right? And so that system that you live in has to, by definition, do all of these other things very, very seamlessly, right? How do I get data in? I should just click a button. How do I refresh all my dashboards? I should just click a button. How do I want to see the new opportunity in, private credit versus secondary markets? I should just be able to click a button and then execute the trade. So that, we are a long way from that, just because each individual silo, as we talked about, is its own ecosystem of, branches and things like that. But if you can stitch that all together and create a user interface, right? And this is the other very, very important experience, is like, kind of the Bloomberg terminal experience today, visually, UI, UX, it's not going to work in this generation, right? So you have to have a UI, UX, a user experience combined with the power of everything that sits behind that. Then you've got something.
Got it. And I want to ask now, focus on the geography, because you are in discussions with allocators and GPs as well as institutional investors in the US as well as in Asia and to Europe to some extent. Is the conversation around these management tools different in different, let's say, geographies? I know it sounds very weird to ask this question because investors should face similar problems everywhere, but still.
Yeah, it's a combination of two forces at work. So one is education, right? So there's different levels of education in terms of, why I should be investing in private markets. And the second competing force here is really the adoption curve. And in startup parlance, we call it, okay, well, when is this problem to a point where my hair is on fire and I need to put the fire out? So different geographies, and also by extension, different types of customers or LPs or allocators, they have different type of levels of education and different stress points around when is their hair actually on fire. So let's pick Asia, for example. So we have been spending quite a bit of time pursuing the Japanese market. It's attractive, both because it's large, it's coming from Excel, pen and paper in many instances. But we also know the way of doing business in Japan is long, it's slow, and it's because they are very comfortable having a lot of manual processing. So the threshold of pain in terms of throwing 5-6 people at a problem is quite high. But it's changing now, right? It's changing. It's finally reached a moment where it's like, well, we should be redeploying those resources to be doing higher value things instead of things like copy and pasting into Excel. So the adoption curve in a place like Japan is completely different in terms of the pace of that adoption, or that definition of my hair's on fire, I need to fix this.
Got it. So it's not per se about geography, but rather about sophistication, how urgent that need is on a specific area, and so on. And obviously that drives adoption towards different portfolio tools. If, for example, one investor is just focused on, hey, I want to really find out the best deals which are happening, probably they would go for some discovery tool. And if they're really focused on bringing their private and public portfolio together to some extent in a dashboard scenario, then probably they would come to you or similar startup, right? Okay.
Yeah, but there's a very important network effect that is geographic specific in terms of the signaling of, well, you just landed this big Japanese customer, getting the second or third customer becomes a lot easier. Whereas a family office in the US, they're an independent thinker for the most part. So geography, there's interesting network effects from a pure sales, business development, go-to-market perspective. Again, because of my background spending time in Asia, and my co-founder is spending 13 years of his life in Asia doing business. You know how to approach certain markets because you're already kind of tapped into the dynamics of those network effects. So I think your point is spot on. I think there's common dynamics that are not geographic specific, but the execution of how you sell into these markets and how you service these customers, that does have important elements of the thinking, the group think of that geography.
Makes sense. Makes a lot of sense. Moving from that division of portfolio tools, I want to focus on GPs versus LPs and how this world of portfolio tools is divided and where is maximum growth coming in. What is the most important tooling systems for GPs? And obviously, we talked a lot about LPs already, but if you want to capture some point that we missed already, feel free to do so. So, GP versus LP, where's the top toolings coming? What are the biggest and the hottest areas?
The GP tooling is absolutely the fastest moving area because I think GPs are naturally curious animals, right? They see something shiny and they want to try it out, right?
Okay.
That this is just, let's not just limit it to GPs and venture, right? Just GPs in general are short on time, short on staff. I need to get to my answer. So they're an amazing customer base to tap into for doing things like free trials, freemium, and trying things out. But they're going to be a little bit different in terms of the longevity, the stickiness compared to LPs, right? So if we start with the type of customer, GPs are very different than LPs. So in the tooling space, in the software space on the GP side, there's a tremendous amount of demand for optimizing that kind of front office function. I've got
Okay.
all these pitch decks I've got to go through. I've got all these data rooms, and boy, it'd be nice if an AI agent can go and scrape that and produce an investment memo, right?
Okay.
So there's startup companies out there that are making great strides in that area, and then you combine it with GPs who are very receptive to kind of trying these out. It's a very fast growing market. LPs, on the other hand, are different animals, maybe not so curious. They're thinking about, oh my gosh, I need to do these 5 things to reinvent my existing process before I can even consider how I would adopt something like Revere. So it takes a lot more patience. It takes a lot more unique understanding of how one customer is different than another. And of course, positioning yourself as that consultative partner in being able to make this digital transformation. But the upside is these are massively large contracts and they're very, very loyal. And the expansion opportunity of like selling module A and then upselling module B is tremendous. So that's really where the trade-off is. And I think as startup companies, whether you're building for GPs or LPs, you have to kind of understand these dynamics going into it.
Got it. And if I have to mention, because you mentioned AI quite a lot of times, AI for GPs, what's the top use case? Because now these days there are like AI for discovery, there's an AI for making the investment process easier, not and there's kind of AI VC as well, right?
Yes.
So
Yeah.
there's a huge variety of what AI can do effectively. What are your thoughts on this?
It's parsing through data, right? So the same way a GP would have hired an analyst, a smart analyst, to go through and do research or go to like a pitch book database and collect a list and then summarize that and even put it into a nice fancy PowerPoint. A lot of that functionality is now being automated with AI. And so it definitely has more of like, I call that front office functionality of screening, diligence, getting to the format so I can make an investment decision. And there's a lot of risk to that because I think, again, it's only as good as the information, and sort of part of the art, especially in venture, is like there's a human staring across the
Yeah.
table and saying, I'm sizing up this founder, right? And AI is not going to be able to replace that. So there's tremendous strides in terms of what AI can do in terms of automation and efficiency, but it doesn't replace, in my opinion, it doesn't replace the decision itself because that still requires a human on both sides of that transaction.
Human angle to
Yeah,
kind of
of course.
finally take a
Yes.
decision and so on. Okay. What are the, I know we covered parts of it, but if you can summarize the biggest LP expectation from portfolio tools.
The biggest expectation today is honestly they want to make sure something works. So let me pause for effect. They're not asking for the most visually appealing something something. They're not asking for, hey, I want 90% of my job to be replaced by AI. They want the reliability when they do turn something over to software or AI that is going to work. Because the downside of something not working 1 out of 10 times or 1 out of 100 times is tremendously impactful.
It's quite huge, yeah.
So what that means is we can't, as a technologist, as a startup founder, we cannot rush and brush over this concept of like, you know what, we need to make sure this core functionality works. And I think very, very few startups, especially in the sales angle, really appreciate this. And we know, because I can tell you without saying stories, I've been in situations where I did something and part of the data I collected or the software, it didn't work and led to a bad decision, right?
Okay.
And that's game changing. Like you get rid of the system, people get fired because of stuff like that. Selling to LPs means you have to make sure whatever the core functionality works. I would say that's kind of the top answer. And then the second thing, which is, right behind it, is they want a system, they want an experience that kind of grows with them, right? The moment they said, you know what, like I have an idea for this new dashboard, it's going to be great, because I always have this one client that is asking for, some esoteric information. It's like, oh, Revere, can you guys create a dashboard for that? Give me 15 minutes. I'm going to refresh the platform and it's going to be, there when you log in next time.
Okay.
So the combination of it has to work. And I want to be participating in terms of like, okay, as I evolve, as my portfolio evolves, the product experience has to evolve as well. And again, this is something that is not well understood by a lot of people who are selling it to LPs.
Got it. We are nearly at the end of this discussion, and I want to ask the future. We discussed a lot about the expectations. We discussed what's there in the market right now. We also, to some extent, discussed, where the future lies and how things will kind of evolve. But if you want to take like a 3 to 5 year view of the whole ecosystem of portfolio management tools, overall tools in the private markets industry, what are the biggest trends that you see?
Time frame wise, I think the future, is a little bit fungible. But what I would say, the opportunity that I think is underserved or should be served in, let's just say that 3 to 5 year time frame, we very much are losing touch of the human and the community element of how people are making investment decisions, right? And especially in private markets.
Okay.
So I believe the future actually is a little bit of a reversion to what made venture private equity difficult to begin with, which is it was still very much human to human. So as AI and software kind of eats the tooling and infrastructure and just makes it so seamless, we use that analogy with the Bloomberg Terminal, we really need to start to architect the user experience around the human interaction, the community building. Because I believe the value in the future is going to be, well, you know what? I talked to this family office and they have a deal that is not being shown on a marketplace.
Okay.
It's being shown to 3 or 4 people, but because I was there, I had a good relationship. I got into this amazing opportunity in, real estate or whatever it might be. So at some point, I think as much as we are ramping toward this tremendous technology modernization of workflows, at some point we'll start to shift the other way. And we have to start to remember, okay, every investment decision, there is a human behind pushing that final proverbial, trade button. And that's something I think a lot about. And I think that's also why I think content community, bring people together with new types of events, with sharing best ideas. These are all things that we want to start to reintroduce into the market, starting as early as this year.
Amazing. There was a term which was used for private markets, I think 5 to 6 years back, which I absolutely love and which will be captured in the report. It's called relationship alpha, right? So, private markets is all about relationship
Right.
driven business and getting access to the deals. As you said, there's a real estate deal coming up, which is not on the platform, but it's kind of a handshake, relationship based, one to one. That's where the probably the alpha would lie. And obviously, portfolio management tools, and it's going to massively increase it. They're going to capture a lot of the value chain, and they're going to make the life easier for GPs as well as LPs. So there's absolutely no doubt over there. And what Revere is doing is obviously fabulous as well. But this relationship alpha element, which you mentioned, is kind of will always be there, will always come back, even if it's gone to some extent in the private markets, right?
I love that term, and I think it's the one part that doesn't infinitely scale. But I think that's kind of the beauty in all this is like there's elements of what we have spent the bulk of this conversation absolutely is scalable. The usage of data is scalable. The usage of software is scalable. And relationship management is scalable to a point, but it's not going to reach the full, algorithmic trading level. And I think that's kind of the love and the passion of why we have so many participants in this industry that are both practitioners and also technologists. And you can't decouple those things for all these reasons that you talked about. So
Awesome. Thank you so much, Eric, for shining light on the entire landscape of portfolio management tools and how we see them in the market, how they're going to come into the GP and the LP world. It's completely fabulous what you're building with Revere. And thank you so much for joining in today.
well, thank you. I'm tremendously grateful for the opportunity and look forward to future conversations.
Thanks a lot.